That's the SGX Nifty. Now keep in mind we were shut yesterday and this is for Nifty futures. So it's still indicating about 15-20 point uptick if you are going by strictly by this rate on the Nifty futures. Sudarshan Sukhani, Mitesh Thakkar join us in a bit. Rajat Bose will also be with us. Good morning, Sudarshan. What's the trade now? The big trade played out, of course, on Tuesday. But for existing longs, what's the call? And for those who want to enter fresh, what's the call now?
Good morning. Well, you're right. The big trade was on Tuesday. The Nifty was in a trading range for more than 3 weeks. And on Tuesday, we had a decisive breakout on the upside. Now, I am a very big fan of trading ranges when they break out in whichever direction. We need to respect those breakouts. So if you are long in the Nifty, my suggestion is convert this into a positional trade, accept the volatility that will come maybe today, maybe over the extended weekend, but be long. If you don't have a position, any intraday consolidation or dip, and that should come today, that is an opportunity to buy the index. Our targets are 11,950.
Okay. All right. We'll come to you for more stocks. Mitesh, how are you trading the indices?
Good morning. So we've been kind of positive given the fact that we were expecting a breakout to happen very soon a couple of days back when the intraday indicators had cooled off from overbought levels and started rising. That breakout has happened. Given the fact that it was a 200-point range, the next mathematical calculation tells you that you should add 200 points to the breakout level, which is 11,750, which is what I think Sudarshan also highlighted, a target of around 11,950. That being said, 11,750, 760 becomes your immediate support, and any fresh long positions should be taken with the stop just 10 odd points below that, or if people have been holding longs, trail your stop loss to about 11,740. On the Bank Nifty, I think that's the key index to watch in a day or two. We are close to the earlier highs. We haven't broken out as we've done on the Nifty, but a move past 30,600, 620 should suggest an immediate test of 31,000 on the upside. So maybe Bank Nifty could enter a fresh trading opportunity if it starts getting past 30,620 today.
Okay, well, Rajat Bose is also joining us to give us his views. Rajat, hi, good morning. What's the sense you're getting? Does it make sense to go long even at these levels?
I would prefer to do so provided there is a bit of a decline, or at the current moment if you are to go long you have to put a stop loss below 11,740, and I also agree with Sudarshan that the eventual target would be 11,950, but for today if the index manages to get past 11,800, then 11,849 would be the target. But I would prefer to actually play on the long side if there were to be a dip, or even at current levels if there is any consolidation. I would be looking for an opportunity to buy and not to sell the index, because it is showing a lot of momentum, and aided by the Bank Nifty as well, where I think you can go long with a stop below 30,445 and 3645, and eventual target for 1,950.
Okay. Mitesh, good morning. Let's discuss your individual stocks. What's the call on Reliance, and what are your own stock calls?
So on Reliance, I think recently tested very important support of 1320, bounced back from there, hit a high of 1360 and closed slightly off the highs. I think 1320, 1380 could be a range which the stock might consolidate for some time, but I think eventually it should start getting on the higher side. So closer to about 1320 would be entry points with a 1% kind of a stop loss. That apart, I have buy calls on Larsen and Toubro where the intraday charts have improved. Keep a stop below 1370, look for targets of 1410. Cement as a pack looks extremely exciting, but I picked a mid-cap cement this time. Ramco Cement could be bought with a stop at 774 for targets of 810. And Titan is my third buy call where the intraday charts are positive. So keep a stop at 1103, look for targets close to 1150. And I have one sell call that's on Reliance Capital, which had some kind of a breakdown on the hourly charts day before, and that can be sold with a stop at 176 for targets of 160.
Okay. Thanks for that, Mitesh. Sudarshan, I can't remember if you discussed the bank trade, Nifty bank trade, and you have Axis Bank as one of your buys.
Well, yes, the Nifty bank trade is to be long in the Nifty or to go long there. Your stops will be somewhere around 30,100. Because of today's volatility, and you have this weekly expiration now every week, and then there is a weekend, have wide stops but be on the long side. Axis Bank is a buying opportunity. Actually, all the three banks, HDFC Bank, ICICI Bank and Axis are giving a sense that more into on the upside is there. So Axis Auto is coming out, it's putting its act together, it's now outperforming three-wheeler, two-wheeler stocks. Bajaj Auto is a buy. Bajaj FinServ is a buy. That stock has had a one-way rally. It's one of the few NBFCs which you can buy with, say, comfort. Finally, ONGC, it's a remarkable chart. A big decline, a bear market. Now for the last 6 months, it's building a very attractive bullish pattern. That's a positional buy and also for today. I just have CG Power as a short sell, more to balance it.
Okay, thanks for that. Rajat, you have a lot of consumption stocks, auto and FMCG names in your basket today. Take us through that.
Yeah, Sonia, I'm actually very bullish on auto. For me, I would say that auto sector, be it two-wheelers or four-wheelers, actually showing turnaround signs, at least in its price movements, may not be in its sales or other fundamental parameters, but charts are suggesting that they are on a turnaround path. Maruti is my best bet on the long side. 7424 is my target for today. 7520 is my target today and 7424 is my stop loss. I'm suggesting a buy. My choice of 7520 is because 7525 there is the 200-day exponential moving average. So for today 7520 target suffices. And then I have Hindustan Unilever as a buy. I would put a stop loss below 1727 and 1755 and 1773 are the two targets for Hindustan Lever. Hindustan Lever is showing very strong momentum, so I am expecting these levels to be scaled up. In fact, it could even be headed for 1800 levels. RBL Bank is also a buy. My stop loss is below 673.50, 689 and 692 are the two targets. I have chosen RBL Bank over HDFC Bank because RBL is showing much better traction. And Canfin Homes is a sell. I would put a stop loss about 347 and target would be 339. And the final FMCG stock that I intend to sell is ITC. There is a tweezers top pattern and it hardly ever fails. So there is a possibility that ITC might retest 300.50, which is my second target, and the first target is 303.25. I would put a stop loss above the tweezer stop at 310, so my stop loss is 310.25.
Okay, thank you very much, Rajat, for your calls as well. We will come back to you, but for now we have to actually look at the big boy Reliance, because there has been so much of news and so much that will come in terms of numbers. First up, the Saudi Aramco report indicating that this large company could initiate talks to acquire 25% in their refining and petrochemical business of Reliance. I'll come to the Hamleys, which is a money control news break, our in-house news break. But let me invite Mr. Tulsian to give us his views. Good morning, sir. Thank you very much for joining us. First up, this Aramco issue. How seriously should investors take it? Should they jump in right now? Or do you think it will come only after the businesses de-merge? I mean, the telecom retail businesses.
See, Lata, difficult to give on the structuring or maybe the timeline or maybe the mode, but I am very serious on this Aramco news because the kind of interest which, Saudi companies really looking to come into India. In fact, because of the huge political resistance and all that, they will not be able to see the new refinery coming in Ratnagiri and all sort of things. So obviously they have to look for a choice. And now if I go by the market in the reports and all that they are looking to acquire 25% stake in Petchem and refinery, I think that will be the excellent fit for them. They get the operational projects, in both the sectors, that is Petchem and refinery, on the platter, with a very efficient assets and all that. Now it's only a matter of valuation. And if I just quickly take that call, and if you take the value of assets, of about maybe 210,000 crore of the book value, that is written down value of the assets of the refinery as on 31st December, and maybe about 120,000 crore assets again on the written down value for the Petchem segments, give a book value of about 330,000 crore, which translates to about $48 billion. And if I just say that if they are looking to acquire 25% stake in these two verticals, that means one can easily expect 25% premium over the book value, which translates into a valuation of $60 billion. And that simply straightway gives you on an arithmetical basis $15 billion as an equity stake, because eventually that money will be coming in the company. So it is in the money, in the post money, in which again eventually the Saudi Aramco will also be having 25% stake. Let's not complicate the things. That eventually I taking the value at 60,000 crore, $60 billion for petchem and refinery both. And even if I quickly go extend it further on the earning multiples, both the verticals are now having EBIT of, I'm referring EBIT, not EBITDA, I'm referring EBIT of about 50,000 crore on an annual basis, putting together about 32,000 crore EBIT by petchem and about 18,000 crore by refinery. And if you add the EBITDA, that means add 10,000 crore on interest and 10,000 crore on depreciation. Again, I'm only referring in respect to these two verticals, not the entire consolidated Reliance. So you have an EBIT of 50,000 crore from these two segments, and you have an EBITDA of 70,000 crore from these two segments. So again, maybe a EV to EBITDA of about 8 times on EBIT, and maybe on the at a multiple of 6 times on EBITDA also gives you a valuation of about $60 billion for both these verticals or both the segments.
Mr. Sudarshan, good morning. Just to play a devil's advocate here, why would you want to sell a large stake in your family jewel? Do you think we are reaching some kind of plateau for these businesses? And what's your stock call now? It's had a big rally. You've had positive view on the stock.
See, Anuj, I would say that family jewels keep changing. In the olden days, you had the gold as the family jewels. Now you have the diamond as the family jewels. And I agree, partly with you that these are more of a bread and butter business. They are giving the consistent kind of things. And if you take a $30 billion in the books of the company on a consolidated basis, I am referring 290,000 crore debt, which I am expecting as on 31st March 2019, as per the estimates having worked out by us, and 80,000 crore cash and cash equivalent. So the company is having net debt of about 210,000 crore, which is about $30 billion. If they can fetch about $15 billion straightway, you can trim your balance sheet on the debt level half. Again, they are looking to monetize the passive infrastructure of Reliance Jio, the tower, fiber and all sort of things, which is again seen to be a very pragmatic move. Difficult to quantify at this stage that what will be, though they have initiated the process, 51% having given to P investors and all sort of things. Maybe take a ballpark that they should be able to bring down the debt there also maybe by about $10 billion. You are again taking back your company on a cash level with a cash generation of maybe about 50,000 crore per year going forward, which again, because they have a huge plans of capex in Reliance Retail and Reliance Jio. And let's not forget that 5G is coming a couple of years down the line, which will again be requiring the capex, which again, Reliance Jio will be very aggressive in seeing to kill the competition, which may not happen, but they will be very aggressive in that. So you have your capex lined up, so why won't you trim why won't you make your balance sheet light, which is already now, gross debt of closer to about 290,000 crore, or maybe the net debt of about 210,000 crore in the balance sheet.
Mr. Tulsian, good morning. So just to take that argument forward, in the results today, what are the key numbers to watch? And this growth that you're talking about in retail and in Jio, I mean, this quarter's revenue for both these verticals are expected to grow about 60%. You think a lot of this is already in the price because the stock has gone up 30% from, the lows in October?
See, Sonia, if I just quickly go on the Q4 estimates, we have estimated GRM of about $8.1 for this Q4, and on a sequential basis, if you take a call on petchem and refinery, both probably we may be having a drop in the absolute EBIT number. We have expected EBIT to fall from 8,200 crore in petchem to about 8,100 crore. In refinery, we have expected it to fall from 5,050 crore to 4,650 crore, maybe a fall of about 400 crore. Largely because in refinery, you will be seeing the capacity utilization falling at about 106%, from 116 to 117%, what we have been seeing all along, with a crude through processing of about 16.8 million ton. And yes, the fall in this absolute number of EBIT by about 500 crore will largely get offset by the Reliance Retail. I'm not taking so much on the Jio. Jio may show a marginal increase of maybe about couple of hundred crores in the EBIT on a sequential basis. but retail can show an increase of about 250 crore in the EBIT on a sequential basis. So eventually what you are losing of about 450 crore to 500 crore on refinery and petchem on a sequential basis at a EBIT level can largely get offset by the Reliance Jio and Reliance Retail. But the probably below that is PBT, below PBT line, probably one has to keep an eye on deferred tax amount and the interest income, and maybe the tax liability also, though we have estimated tax liability at 20.5%. We don't we sometimes try to just reconcile our PAT estimates of all other houses with the reported PAT by the company, but it is very essential to look to these three non-operational items also: the deferred tax liability, the interest income, and the tax amount, because eventually the effect will always be given by the company in Q4, the residual tax liability. So these three are very important. I am expecting some kind of positive coming on from all these three, which will eventually see the PAT increasing to about 10,475 crore, slightly higher by about 100 crore on a sequential basis on a consolidated level.
Okay, so today at 1300, 1350, you're a buyer of Reliance?
Yes, Lata, it is a buyer largely based on the Saudi Aramco news, who are looking to acquire 20. Because as I said, that this will straightaway be reducing the debt. If I just take the ballpark figure of $30 billion as a low net debt and $15 billion expected stake sale to be coming in, or a stake dilution to be coming in petchem and refinery segment.
Okay, Mr. Tulsian, thanks a lot for stopping by. We'll of course see you in the evening once again when the numbers come out.